Welcome back, everyone, to Bitcoin 2025 here in Las Vegas. It's been a great day. It's Industry Day, the first day of the event. We've heard from all kinds of interesting people. We had Cynthia Lummis on the main stage. We had all kinds of content, but that doesn't matter. The big story's been here at the Roxom TV booth. We've had some of the best people in the industry. We've had Adam back here this morning already, and now we're joined by Joey Garcia. Joey from Xapo, please tell us a bit about your travels over the past little while. I'm also joined by my co-host here, Aaron Stanley, also from Roxom TV. Let us know a little bit about coming here. This is a big move for you guys, coming all the way over the pond, as they say. You guys are based in Gibraltar, do a lot of stuff up in England. Here in Las Vegas, long trip. You travel a lot, though, don't you?
Too much travel. It's way, way too much travel. But look, it's been amazing. We were here last year at the Nashville event, obviously. And that was a big announcement. And you know, Xapo's one of those businesses. We've been in this game a long time, back in 2013, and I like to think really on the front edge of developments as they've happened. You know, pushing boundaries. So you know, it's great to see the US talking about building a secure framework and developing a new regulatory standard. That's all wonderful. You know, we were pushing for that back in 2014 and helped lots of countries start those discussions. And that's one of the reasons why Gibraltar PLC came onto the roadmap, because they were one of the small jurisdictions able to move quickly and nimbly. But it's one of those things, as you know, you both know, you've got to keep on top of developments as they happen. Legislation can't move at like a million miles an hour, but thought processes do move. You know, policy direction does move. Interpretations of stuff move all the time. And these are, like us, we're a global, cross-border, digital business. It's wonderful in what it can achieve, but when you look at it from the microscopic sort of regulatory lens, there are all sorts of triggers you can have all over the world. So those are things that we need to monitor very, very carefully and control. But from the US, Vegas is obviously, everyone wants to be in Vegas. I've definitely put myself on that list. But at the same time, it's a continuation of what's happening and what's happened in the US. And we were here a long time, right? So we were one of the first holders of the BIT license. We were registered in every state in the US. And now, with the political changes that are happening, we need to look at all that as well. We may not just want to be on announcements. So those are things that we're assessing ourselves as well and taking a look at. Makes sense.
Well, from what I see, Xapo has been one of the firms that has had the most, the time preference question has been there for a long time. You guys have been planning long time in the future for quite a while. We saw already with the custody business in the beginning. Bitcoin at $200 and you're going to hide it in these exotic places, and people are saying, what is going on here? So you guys have been at the forefront of finding out where to situate yourself geographically to offer the most secure services.
Yeah, that's super true. And I think I go a bit beyond that. I think it was really awesome, whenever it was, end of last year, with the BlackRock guys coming out, putting out these statements of like a 2% Bitcoin allocation and a balanced portfolio being, a good sort of way to think about the asset class. That's great. But we were writing those papers like in 2017, and it's great that Davos and the World Economic Forum now have a big sort of crypto, so that's great. But we were having those arguments against brick walls in 2016. And also, this is a Bitcoin conference, and we're like ultra Bitcoin centric, right? So, I don't think you will find, well, I actually know you won't find a business that's been involved in the crypto industry from 2013 that hasn't touched a single other asset class. So when today everyone says that they believe the Bitcoin narrative and that they believe in the sort of value proposition, but we really have believed. So
what's been like the driving force of that? Was that really just kind of an outgrowth of like Wences's conviction, from the early days, and like just Bitcoin and like. Cause I mean, I imagine like the temptation has always been there. It's like, what if we dabbled a few shit coins and it might, like. But like what was it that really kind of kept you guys like on that straight and narrow track? Like even when everybody else is just making all sorts of money head over heels in other places doing other things with their coins.
Yeah, I mean that's a good analogy. I mean you've probably heard, or people have probably heard Wences tell the story that he's told. But anyone who's lived in a jurisdiction or an area, in his example it was Argentina, where whatever life savings have effectively gone to zero value like once, twice, 3 times in one lifetime, to talk about a value proposition that sits outside of a network that's controlled by a central government, part of the Bitcoin value proposition, is, it's attractive in a way that it can't be attractive to an American who earns US dollars in their bank account, or an English guy who earns sterling in their bank account. And the value proposition around protecting and growing your wealth in a way that is secure, long-term, based on sort of core values and principles, as soon as you merge into other stuff, you're kind of breaching that story. And I think, like, in the long term, hopefully we'll be right, and that's what we've backed. So it was never, if we were looking at this as a transactional-based money-making, of course we would have done all of that crazy stuff. We would have done absolutely all of it, but that isn't the story we wanted.
And I suppose it gets easier to stay on that straight and narrow when you come out with a conviction, you say what you mean very clearly for years, but then suddenly, indeed, BlackRock is allocating its best educators. Really, that's what these guys are, is they're there to educate people, and they're recommending the exact same thing you did. So that kind of confirms your choice.
Yeah, I think so. And in a lot of the world, we were talking about Argentina, but there are lots of parts of the world where if you talk about Bitcoin price volatility, they'll laugh in your face when they talk about, when you assess it against currency volatility in their local currencies. It's such an interesting, long story behind it all. But the value that it has. So today there are people here at the event have talked a lot about corporates and institutions, and people talked about strategic reserves and all of this wonderful stuff. You've all been in the ecosystem long enough to understand how custodians operate and how you can assess the value or risk of a counterpart. In the classic financial services world, that doesn't really exist. So if you speak to a lot of big companies or institutions and you say 2% allocation to Bitcoin, how do I do that? The first question is, where do I do that, or how do I do that, and what do I, and then if you say, well, and that's one of the reasons why those massive inflows to the ETF ecosystem have happened, because it's a trusted counterpart, and BlackRock are there, and it's solid, and all of that good stuff. What people focus less on is, it costs you 20 basis points to hold those assets in an ETF. The BlackRock, the grayscale is more like 1.5%. It was higher than that before, but and then when you start to reverse calculate 20 bips or 1.5% on a Bitcoin value over 5 years, I can tell you what $1 million investment 5 years ago, being charged 20 bips, would have cost you. So suddenly, people who really know are looking at proper infrastructure. So what are the custody? Are the custodians changing the pricing models and the charging models? How do I manage that risk? Or the other end, and you've seen lots of it around here as well, how do I put that asset to work? So, Bitcoin yields are like a big thing. Discussions around it are a big thing. And again, it's that massive variable of risk. In the same way I was talking about your counterpart, if you're an institution, a lot of them don't know the difference between, say, Xapo, which is a bank, like a formalized bank with 12 years of history, crazy nuclear vault infrastructure around security, etc., and another website, totally unregulated, massive following on crypto Twitter, loads of nonsense that they talk about, and influencers are pitching the same message. How do you do actual DD on a crypto business? Really assessing properly the infrastructure that even licensing doesn't quite do that, because if you say I'm licensed in X, what does that mean? It's not the same as the classic financial services world.
Yeah, I tell people that, I say, those bureau de changes you come out at the airport are all licensed, but would you before your travel leave your life savings with them and then hope it's there when you get back?
Well, exactly, and most of them aren't even licensed. Most of the regulatory frameworks in the world have been developed to comply with the FATF recommendations, and the FATF are not a regulatory authority, and they didn't put out regulatory recommendations. It's effectively money laundering, and it's the example I've given many times. It doesn't matter how much compliance FTX run, the core infrastructure of that business, right from the governance principles all the way down to the operational infrastructure, didn't work, and that's what regulation should actually cover, but it didn't. And so, again, saying I'm licensing jurisdiction X, most people don't really know how to assess the framework or what it does, or how, are assets segregated from the balance sheet of the business, or are they on balance sheet? And what happens if something goes wrong there? They don't really understand that, and that's it's developing and it's accelerating. I think a little
even
bit.
to go back to that's something I've never actually heard before. So I want to make sure I understood it clearly. So when you talked about traditional finance participants and when they do try and get a position in whatever asset, what you said, if I'm understanding correctly, is that Bitcoiners, because they understood the nuance of custody and the importance of custody, that's not something necessarily, to them it's all just a vending machine or something, or just a play?
For a lot of like large businesses or corporates, even like through to asset managers who are very smart, advanced people, but they just don't understand it yet. It's a developing sort of education, and you know they just don't understand it. They don't want to be. If you open a bank account in the US, you don't do forensic due diligence on the bank, right? It's regulated and it's operating to the standard of a bank. But in the crypto world, that doesn't really exist. So, you know, what exactly am I doing? And if it's your own assets, that's another big difference between a corporate and an individual. If I open an account, it's my risk. I'll do whatever I want, and if I screw it up, I've screwed it up. As soon as you're managing someone else's assets, you have a different level of responsibility and risk, and there you really do need to understand it, and they don't understand it. That's why they go to the classic. I mean, that is one of the reasons why the ETFs gain the traction they do. But you know, if you're a Bitcoiner and you're talking about the difference between, you know, owning and controlling a unit of the network versus wrapping the price into something that you own, you know, those are philosophically two very, very different things. We are, like I use the analogy all the time, there are banks or institutions that are interested in crypto, that's great, and then there are Bitcoin native businesses like us who are migrating into the financial services world. We're a Bitcoin native business that's got a banking license. We're not a bank exploring Bitcoin. And there's a big difference between those two things.
Yeah. And like I was actually thinking about the ETFs in a conversation I had the other day, and the way we kind of described it in this conversation was like it's almost like it's like a reverse tokenization. Like you're taking a digitally native asset and you're sort of reverse tokenizing it to make it palatable to like kind of analog financial world, so that all these guys that like we're talking about who don't understand the nuances of kind of owning, you know, controlling your own keys and like
exactly.
like you're kind of trying to make it like palatable for these people, right? And you know, it makes it easier for them to access. It's less headache for them, less homework they have to do on it. You don't have to go. You don't have to go into your custodian and be like, what kind of NPC hardware are you guys running or whatever. You know, like nobody.
Exactly. Exactly. And it's also like even more fundamentally like you know the Bitcoin network, you know, as a, let's just call it a payment system. It's not really being used at all as a payments infrastructure system at the moment, but you have the Lightning Network, and you have the guys, the Lightspark guys are here doing some like really fascinating stuff
and
over
Square
Lightning.
today announcing all terminals and active Bitcoin. We got the steak and shake right there. You can buy some fries.
Well, there you go. I mean, you know, but the analogy, the reason I say that stuff, or if you look at some of the L2s on the Bitcoin network and the DeFi modules that are being built out, and the Babylon guys are here as well, and there's a lot of stuff happening. It's not, I don't know if there's going to be one. You know, the old analogy was, you know, TCP/IP is the language of the internet, and what will the language of the blockchain be? I don't think it's going to be just one, maybe. But the Bitcoin network, you know, has by far the biggest adoption in the world, and it has all these functional purposes being built around it. So could it be that starts to, I mean, it could be.
One of the things I'm seeing, you know, there are a lot of comments on it today just about framing Bitcoin banks when you talk about them being two different planets, this idea of a bank being interested in Bitcoin versus a Bitcoin bank being interested in financial assets. I know when I heard the thing that everyone's talking about today, Michael Saylor's statement about not having proof of reserves because it might have a risk. Well, in my experience, when I worked for Kraken and was heavily involved in the creation of the Bitcoin reserves tool over at Kraken, it was precisely because in my mind, if you're going to be a bank and you forget, you know, a Bitcoin bank, and forget what you're going to be in the fiat world, you kind of have to show your reserves because they show your economic capacity to lend money, because you're not commingling deposits anymore. You got to have a balance sheet that is attractive enough and strong enough, just like in the pre-fiat days where how much money a bank had was how much commercial capacity the bank had.
100%. I mean, that's a very natural I mean, this is like since the beginning of time. That's
well,
how
we forgot recently. You know, it's been forgotten.
Yeah, look, I mean, I think you know how to. We're talking about reserves or balance sheets and how people assess Bitcoin native counterparts. And there are lots of platforms here, and there'll be some really, really good, well-structured ones, and there might be some that aren't as well structured. You know, it's changing, it's emerging, it's developing. You know, to use the old analogy, we were talking about banks and we can whatever financial institution you want. In the classic world, there are models of how to assess the risk of a counterpart. And if you're a bank in New York, it's stamp of approval in a certain way. And the crypto world, like we always keep saying, needs to get to that level to operate at that sort of status of mass adoption and mass integrations. And I believe, you know, the focus should be more around like the convergence of these ecosystems.
The sort of secure integration.
Yeah, the integration, the bridging, the convergence. Bitcoin shouldn't live as a sort of isolated asset class in this completely anonymous ecosystem that no one understands. It needs to be integrated in a level of trust and reliability and all of the good stuff. And
but what we're seeing, it looks like, is a lot of the market is trying to organize around it right now. You're seeing it become the center point of a lot of new commercial relationships and a lot of optimism. I mean, you can even see, you take these trips all around the world, and I'm sure you see this community like here. This is just people who love the future.
Incredible. It's incredible, and also like don't underestimate like the effect that, I mean, the famous Trump statements of a year ago, and you know the Genius Act developments and the strategic reserve points that the U.S. has made. Don't underestimate the outflow impact that has on the rest of the world, because everyone in the world is not suddenly thinking, oh my God, tomorrow we need to set up a strategic reserve in BTC, but they're all now looking at this and going, well, wait a second, we need to look at this now properly. And why have they done that? And how have they done that? And why aren't we doing this? Or what are the things that we need to consider? They're all doing that. From the regulatory point of view, like everyone has talked for years around regulatory arbitrage and looking for the simplest sort of easiest solution.
I mean, Xapo was at the forefront of that, exactly.
Yeah, exactly. And now you're going to have the US coming online, you know, and those jurisdictions in different parts of the world, you know, they all want to develop. I'm just going to call it tax and revenue, in a very basic way, but create, you know, environments that generate interest, profit, thought leadership, all of the good stuff. And as soon as the US start making that call, and it isn't seen as this sort of don't go there territory, everyone else is like quasi panicking, because when you start to do your jurisdictional analysis in a year or 2 years time, everyone might be going, well, why don't I just set up in the US? They're open, it's the biggest economy in the world. So they're all thinking about it, they're all planning it. And what's actually happening, and I think this will be one of these things, I'm sure we'll talk about it another day, but what you're starting to see is regions of the world trying to like close legal connections to servicing people outside of that region. So the EU is like an obvious one. You had the ESMA guys taking their view and forming these guidelines around businesses from outside of the EU servicing the EU. And when is the licensing trigger going to happen? So you're based in the US or Australia, it doesn't matter, bringing the network. The UK is doing the same thing in different ways. So you're starting to see like regions going, whoa, wait a second, how do we stop this cross-border?
I'm seeing capital control stuff happen across the board, even within America, in the sense that, you know, America, people whispering about this new Mar-a-Lago Accord. I don't want to get too far into it because it's all speculation, but you see people predicting that America itself will put on different forms of capital control, particularly foreign investments into domestic US assets, but that of course wouldn't apply to Bitcoin. So again, Bitcoin comes out, tails we win, heads they lose type of situation here.
Yeah.
So there's that stuff looks like it's happening. Foreign real estate might be a thing, and they might reintroduce the tax on foreign held U.S. equities.
Well, there's so even from the we don't want to get into like, you know, tax technicalities, but in the olden days, you had whatever FATCA, and then you had the CRS and the Common Reporting Standards for, if you're American and you open a bank account in Austria, the Austrian authorities are going to report back to the US that you hold $1,000 in that account. That's never happened with crypto. So if you're based in the US and you have a crypto account in Mexico or whatever you want, but that's also going to start to get caught now within the whole new CAF regime and everything else. So, regulation is like, this is, I don't want to go into too much detail, but it's funny. I've been in this world for a long time. I pitched exactly the same message. I said it at the beginning to the exchanges, what was going to come. A lot of them didn't believe me, and it was all like, borders aren't going to exist and governments aren't going to be here in 3 years. And you say, well, okay. And then we said it during the ICO phase, and it was like, look, you have to apply certain standards and do things in certain ways. A lot of people went off the thing, and it creates bad environments, and it creates toxic, dangerous environments. Because even in the ICO days, there were fantastic platforms and initiatives that happened, but then a lot of the crap and nonsense. Same now in the DeFi universe, really fascinating as a concept, but loads of abuse, and the authorities are going to catch up. They're very, very slow, but they do get there. And I'm always proposing to people to, don't try and just play to every single rule as is written today. But if you want to develop the rules, you have to engage. You have to have constructive discussions. You have to say, I understand you see these risks. I'm going to show you how I'm going to address those risks in a way you've never seen before. And I want to help you, and I want to coach you. And that will form policy that develops in the right way. The guys who abandon it and just go, screw you, I'm going to do whatever I want, it doesn't end well for anyone. And when you have bad blow-ups or bad things happening, it affects the entire ecosystem.
It seems to me like the regulatory clarity that we're getting, the industry's been kind of, in the U.S. has been begging for regulatory clarity for 10 years now, right? And now we're finally starting to get that. And I feel like it's going to have almost kind of like an inverse effect to what the industry maybe wants in some degree, in the sense that I think a lot of projects that probably should not really be a lot of projects that are kind of based on very shaky foundations.
Yeah.
They've been able to claim this thing would work if we just had regulatory clarity.
Yeah.
This thing would work, but it's Gary Gensler and he won't let us issue our token or whatever. Yeah. And now it's okay, you've got pro-crypto people all across the board in the government, so it's kind of time to put up or shut up now, right?
Yeah, exactly.
And I think a lot of this stuff is going to fail because they've just been able to kind of use this as a crutch, this lack of regulatory clarity. And I think this theory that I've been nursing here is that a lot of this stuff's going to fail, which will probably be good for the industry in the aggregate, and a lot of this is going to channel additional capital and energy and just mind share back into things like Bitcoin, where and things like you guys have been doing, where okay, we know this works. This isn't just a hedge against. This isn't just regulatory arbitrage type of thing.
Yeah.
And it'll actually funnel some of that capital and that mind share back into more productive use cases, instead of just things that can exist because of this kind of regulatory gray area. I mean,
I've heard, you're 100% right. I've heard that way too much, and I do get some of the frustrations, but I don't know. I mean, I'm not a US lawyer and I'm not a US expert. I have been involved in discussions for a long time. I do find it quite amazing that you can still have the smartest guys in the room come together and not be able to tell you clearly what security is. in America, it's wow. I thought we finished that 8 years ago, but at the same time, when you speak to some of the authorities, they say, "Oh no, we've been very clear what we think that particular." Not talking about security, they'll be, "Oh no, we've been very, very clear what we think about that," and some people just don't want to listen. And it's always that question of finding the balance. If I was involved with things like the Libra project, Libra DM, etc. That's a good example. You had the Tether group and the Libra group at the same time. One going for ultra regulatory clarity, multiple jurisdictions around the world. It was unbelievable, voluminous, the amount of interactions that happened. And what happened? that never got over the line. It was impossible to comply because the rules weren't there. At the same time, if the Tether group had done that, they wouldn't even exist. But they just go. So, and that was the right thing to do. I mean, it's been a very successful project. They'll now start to reverse comply with different things, and they have different difficulties, etc. But the project works. So where's the balance between ultra security and regulatory whatever, and full just go for it and see what happens.
The Facebook story, I'm glad you brought that up. We actually, remember, we took the train down and covered that while it was all happening in 2019. And my observation was exactly that. It was that once the Facebook project came out, the DM, it sort of showed the whole field for the first time to everyone. That I think Washington, D.C. could finally now see exactly what they were dealing with. And that's why I think it attracted so much of that that reaction, right? But Bitcoin, of course, came out looking great in all of that, if you remember at the time. This was a big moment, fork in the road. But indeed, it really woke up regulators to the power of this technology, and that's what got everyone's attention at the time.
No question, and lots of pieces of the MiCA framework in the EU, not just the e-money token piece, but the substantial tests that bring you within scope of the ECB, and that was all very, very clearly directed at projects like Libra.
I was a big fan, though, of that part of MiCA, which is more on the digital bank side, which is more about the, really started as the gift card thing, where they had to be fully collateralized or funded, so they didn't create debt. And I said, this is just perfect for our industry. Right here, this is what you need.
It is, but it's one of these, it's really interesting when we talk about MiCA, you talk about any rules around the world, it's another delicate, very, very delicate balance between, let's just call it a nascent, innovative, young crypto ecosystem of, more technical focus and very ambitious and not used to dealing with regulation at all, like the ultra extreme on the left, and then on the right you have the ultra extreme, proper, full-blown regulatory authorities that have been running prudential frameworks for 150 years, and where should this regulation be? And it has to be in this sort of grey block in the middle. You can't make this universe comply with that universe, but at the same time you can't let it exist in nothingness, and you've got to find a balance that allows innovation to flourish and develop whilst being at least parametered in the right way, so that it can't go too far beyond those risk scales.
The framework I always used to understand even stable coins was the printers, computer printers from the 1980s and 1990s. Back then, every house had a computer room.
Yeah.
If you wanted to join your digital power to the physical world, you printed invites. You printed your homework. Only when we got all the applications ready and social media going and screens in everyone's pocket were we able to fully move into the digital world. Now no one has a printer, and they don't even work. They don't even work anymore. They're gone. the 80s printers were better than the printers today. None of them work.
That's a good analogy. And the other ones that I like are, especially when you talk about, nascent, innovative business and regulatory, killing this if it's too extreme. And this always happens in technology. So if you think about the Pirate Bays and the Napsters and file sharing systems and how they operated, they're completely illegal back then. But those concepts, as they were built, were wrapped into what we now use as Spotify and digital file sharing through systems that allow royalties to be paid to the right people is where it got to. And if you think about Skype and VoIP services. If Skype had tried to apply for telecoms licenses in 150 countries before going live, it wouldn't have existed. It just wouldn't have existed. So they just went for it, and they used very clever systems and then the rules change, and all of the classic telecoms guys say this is nonsense and it's all ridiculous, and eventually they adapt, and eventually they merge, and eventually it gets to a standard that works. And crypto is not a squadillion miles from that. It starts in a certain way, and no one is trying to regulate the Bitcoin network. But how someone gains access to that network or exits that network, or what they can do, that in certain parts of the world or for certain people needs to meet certain standards. And I respect people who say, you know, they want to carry the assets themselves and hold their ledger devices and et cetera, and have their complex multi-sig infrastructure for, you know, corporate accounts. That's fine, but that's not for everyone. That's not for everyone. Some people just want to trust a counterpart that gives them access to the network that they want to enter and exit. So.
Well, trusted counterparts. Xapo's been on for a long time. You've been doing great work. I had a great flashback today. It was Industry Day. It was a year ago on this day I interviewed you on the main stage.
It's true.
Just before old Donald Trump showed up and gave his commitment to Bitcoin. But great to have you here again, Joey. I would love for the three of us to do more content sometime. It might happen. We'll see.
Absolutely.
We'll see.
For sure.
But Joey, thanks so much for coming here today.
Great to be here.
And great. That's the last broadcast here today from Las Vegas, from the Roxom TV booth. Thanks, everyone,